Hi everyone, and welcome to our weekly stream where we take a look at the market and see what's going to be the plan for this coming week. First, we're going to go ahead and start by looking at the earning calendar for the week. Nothing here really, gets my attention. Seems like there are a few names over here in retail. Excuse me, I'm still recovering from COVID from last week. I have some couple of names that I'm actually going to be looking at, like Chewy, ChargePoint, and Best Buy. But and they're all on Tuesday, honestly. But I'm really not too interested in any of the names that are coming up here this week. The next thing that we're going to be looking at is the economic calendar for the week over here. And we see on Tuesday, we start with the consumer confidence report, JOLTS job opening. We have Mr. speaking on Wednesday at 8 a.m. Eastern. And we also have Bostic speaking at 6:30, but it's not going to affect the market. I guess while the market is open for the stocks, it could probably affect futures, but not market. We also here have the non-farm employment change. This is going to be an important event here at 8:15. It's probably just going to be like for gauging the unemployment, which, as you guys can see, over here also we have on Thursday the initial jobless claim. We have an increased number or predicted increased number. Uh, with them trying to fight inflation, what we try to see is that they probably slow down unemployment, and so I'm sorry, employment, and so you'll see probably a little bit of an increase in the unemployment. That will probably be reflected as well in the non-farm productivity reports, probably going to be reflected in the non-farm payroll as well. Over here, we have also on Thursday the ISM manufacturer employment, which basically the ISM manufacturing PMI, I'm sorry, which basically reflects, the purchased goods and services by these manufacturers, um, showing a little bit of a slowdown or prediction here for a little bit of a slowdown. Um, Overall, Friday is going to be also an interesting day here with an on-farm payroll. We see here a reduction in the change between last month and this month from 528,000 to 285,000. Unemployment rate as well comes out at 830. So these reports are somewhat important because they're going to be shown as a gauge for the effectiveness of what the Fed is doing right now to try to fight inflation as they try to slow the economy down, and that's how they fight inflation until they try to bring it down towards 2%. Next, we're gonna take a look at the chart, which is what's important. Starting here, looking at the S&P 500, and yeah, what a day we had on Friday. It was definitely not expected to be like that, to say the least. So, for me personally, I started the day by um, looking at. I'm gonna start over here, probably on the 1 minute, and I'm gonna just delete my doodles over here that I have on the chart. Started the day over here. We pulled back down to this support of 4187 area. We saw that there was a bullish flow on the market net flow actually, and I end up taking a call on SPX, which I closed somewhere over here just because it was Friday. You can't predict volatility on it, which I was right to do so because right after that we had a huge drop. Now, up until this drop here, I honestly thought it might be some kind of a liquidity grab, like, hey, we're just going to take out the longs and come back right back up. And that's exactly what they did initially. They dropped and then went right back up. But right over here at this level, which if we look at a larger picture, if you guys remember from previous videos, we have this pink uptrend channel. We broke this line, came back, retested it, about three times actually, and looks like this was the last time, which was the rip Friday before it dropped, and it started dropping. And the drop was heavy. It was absolutely heavy. And honestly, I kind of try to go a few longs, on this drop and like towards the bottom over here didn't work, down here didn't work, and finally I just gave up because, and they weren't like really large positions or anything like that. They were smaller lottos type thing that we take sometimes on Friday, but I honestly did not expect it to go this steep, and I mean, overall, the drop from the highs of the day was somewhat around like probably a little over 4% here. And so that's a major drop. And here on Sunday night, yes, opened with a gap down. And normally these gaps are easy plays for futures. We open with a gap down, you wait for it to kind of see some kind of exhaustion, and then go back up to fill this gap. They like to fill the gaps. And these happen usually fairly quickly. But as of right now, as we're going through the stream, it's not happening. And actually seems like they're trying to push down towards this 4,039.95 area. And honestly, after such a huge move like this one would expect at least like a quick bounce, perhaps, something like a liquidity grab, even if they intended to go to the downside even more. But as of right now, we are looking at a pretty heavy sell-off. I mean, look at the volume over here. It's pretty strong for this sell-off that we had on Friday, and seems like it's holding off as of today. So it's very important for us to, try to be subjective and not to take a trade just to take the trade. With that being said, you cannot think that, okay, well, this will have to reverse. This will have to reverse. Going into the market thinking something has to happen. Um, the market can be irrational more than you can stay solvent, if that makes sense. So you can actually try to say, okay, well, I'm going to hold. This thing has to retrace. You would think so, but it doesn't have to. It doesn't have to. They can continue the sell-off if that's what they choose. And if we want to take a look at these levels, this is going to be very important here, this area. This is a really key area for us. If And that's an if we lose this area over here, we would probably have another hard sell-off that could take us all the way down to about 3,900. And that's because there's not a whole lot of areas where you can go for support further than down here. So I'm sorry, I had to go on mute for a second. So like I was saying over here, if we drop below this level over here, the next support down you have is about 39.50, and from there you have 39.15, which is another hard sell-off if whichever way you look at it. There's not a whole lot to catch it. But with that being said, after such a huge move like this one, what do we expect? What we expect is basically somewhat of a consolidation here in this area. I would like to see a push back to the upside again. But what I think we will find is probably a lot of consolidation. Usually Monday is a continuation for Friday, just so that they can reach the areas that they want to. But personally, I think this area over here at around 4,000 is going to be key for ES. And obviously this will translate to SPY and SPX. But this key level over here is what we want to hold at this level right over here. We don't want to lose this level over here. We have already dropped quite a bit from the top anyways. And as you guys can see, for pattern traders, we have some nice looking head and shoulders per se, I guess, right over here that you could have traded it. Classic head and shoulders. The break below this 41.12 should have triggered another sell-off down here to 40.74. But honestly, personally, I wasn't taking these shorts because the sell-off was very strong. And I thought, okay, well, this is it. I don't think we're going to go any further, so I'm not going to risk going down any further. Yet they continued and they broke this level and they broke this level. And again, today when we opened the Globex session, we broke. We opened with a gap down, breaking this level over here at around 40.50. I honestly did not expect. We were joking in the Discord saying, oh, well, maybe they just want 40.50. Sure enough, they actually did hit it. And so right now, looking at it, it's not showing any signs of relief as of right now. And so trying to take a reversal play is going to be dangerous and it's going to be, um, like almost like catching a fallen knife unless you're willing to hold on into, further pain or so. However, I have to say, one of the things that I thought was very interesting looking at um, flow, one of the things that I like to look at is called the algo flow, which basically shows, it kind of gives us somewhat if there's any divergence where, calls are pouring in when the price is moving down, or puts are pouring in when the price is moving up. So one of these, I took a look at. Just go ahead and just change this to make it a lot more clear. We took a look at SPX's flow or algo flow. And as you guys can see, this is the price here for SPX. However, this green line over here represent the calls. And so this is as of Friday. So perhaps this was, as you can see here, the timing, kind of went almost flat over here, right around the last hours of the day, but it was fairly high. Now that doesn't mean that the price is gonna be guaranteed to go up. It's just something to take a look at. Like there was a lot of flow for SPX, and it doesn't tell me what's the expiration or anything like that for these types of calls that are coming in. And normally, normally we refrain to look at SPY, the cues, the flows on these because they can be very misleading if we're looking at them in the sense of trying to get a direction for the overall market. Because if the price is going, if the price is going down and or the price is going up and you see calls or puts going, these could be hedges, so they can take a play against the market in a way that to try to hedge they try to hedge their large positions. So it's almost like an insurance policy. You have a vehicle, you pay like $500 or 300 or 200, however much you pay for your car insurance, and you just say, well, in case I have a lot of damage, I could probably, do well on it. But if you guys remember back in July and in August, in the beginning of August, there used to be uh, a very large amount of money coming in the form of puts over here as the market was going up. And we thought like these puts are going into zero because they were out of the money, like 390, 380 puts on SPY, 370. Um, but then again, the market continued to go up. And so if you were trying to follow the big money in that sense, saying there's a lot of money coming in into SPY, well, you lost your money to these institutions, whenever they hedge their positions in SPY or the Qs, they say, okay, well, I'm long on a bunch of other stocks. And so, in case the market happened to drop, I'll make money on these hedge positions and I'll offset my losses on these other stocks. Um, these kept getting rolled over into the next month until, October. Not saying that they're making money on them right now. I haven't really followed as far as like money wise how much it would have cost to try to come up with that equation, but definitely, if you got in any sort of puts around this region up here and these September expirations, September 16th, I think is the date, and October 16th or so is the ones that I've seen the most coming in on. These these guys are banking because from the top that we have from that run, we are down about a little over 7%, about 7.3%, which is pretty decent. It's a very decent drop. So, what's going to be our plan? As far as a spy play or SPX plays, to be honest, you're gonna have to be extra careful this time around. You definitely have to be extra careful because, you know, chances are if we hold this price over here, we're gonna open with a gap down tomorrow on SPY. And if you open with a gap down, I don't really like to trade these very much, even though gaps usually get filled. But to try to put you in perspective, we've seen a gap on SPY or even SPX to the downside from here that never got filled. Go on the daily, we'll be able to see them better. So there was a gap down here in the 347 area in the past that never got filled. I mean, there's been some gaps that have not gotten filled in the past. And so the gap that I was referring to that I wanted to talk to you guys about, it's a small gap, but it's down here about 377 is where around 378 is where it would fill. So are we headed that direction? Could very well be. Are we going to continue the sell-off in the same strength and momentum that we've seen on Friday? Probably not. Usually what you would see is a drop, retracement, or consolidation. So after such a big move like this one over here, which, looking on SPY here, it looks like it's about 3.3%. Um, it's and with the open of the gap down tomorrow, if we held these levels today, um, you know, there is a good chance that we come back and see this 395 or 393 area. Next that we're going to take a look at is Dixie. Usually this is, the US dollar. We like to take a look at this puppy here and see what it's doing. When Dixie's going up, usually, or the dollar, when it goes up, usually what you'll find is that um, equities drop, and so does gold, because investors flock to the US dollar to try to make some gains over there. And it looks like we're having somewhat of a cup and handle formation over here if you look at it. Maybe if we put it on around 4 hours, I would have liked it to pull back a little bit further to be a cleaner setup. But if we break above here on the 10, what is this level here? About 109, 289. Um, your next support up, you're going to have to take a look way back to try to see what would be your next resistance level that you're going to see. Obviously, the 110 as a solid number, that would be another level that we're going to be looking at. But gosh, I mean, you have 109, 838. I mean, this high over here was in September of 2002. I mean, can you imagine the levels of where the US dollar is headed? And so we had to go back all the way down to 2002. So yes, this one here, 109, 838 will be a resistance. From there, we'll do 110 just because it's a solid number. And from there, I would say probably upwards of 111 to 85 is going to be the next resistance. So wouldn't be surprised to see it hit these levels if it actually continued this break and this momentum. And with that being going that way, chances are, go and look at it ES over here, we'll probably continue to the downside. And, I will not be surprised to see the 3900 level coming up soon. Next that we're going to take a look at is going to be gold. And gold over here, don't mind my lines over here, all these lines that I have, but very simple, very basic. We've had like this big old gap down here. If gold breaks below this level, which kind of corresponds with that level that we saw on the US dollar, if we go ahead and put the US dollar here in this level, as you guys can see, kind of go hand in hand, just the opposite direction. This is looking very strong on Dixie, to be honest. Looks like it's breaking out. as we speak. So chances are gold is going to break down from here, and we probably will test somewhere around 1709 or even the 1700. Depends on how far this thing can go up. Gold could probably continue to go down, and I will not be surprised to test this level down here around the 1670s area on gold. Actually, that might not be a bad thing to trade because you can trade options on gold with ETF GLD. Right over here, we're at 161.91. If we break below this level, if we're going to go ahead and take a look at the daily, um, the lows that we were expecting on gold could correspond with about 158 and 160 on GLD. So keep those in mind whenever you're taking a look at these indices like, or the ETFs, I'm sorry, like GLD and you have the dollar index. You know, sometimes you just have to take the opportunity of taking a trade on something like other than what you normally trade. Like if you're trading US dollar, you want to try to take advantage um, of that in options. You can trade UUP, which is up, and this is expected to go up, obviously. And if you go back just the same way that we looked at the US dollar, we're going to go back probably, to infinity and beyond, going back way, way back. I probably wouldn't be surprised to see 30 on UUP here. So this is basically a USD bullish ETF, and so whenever USD is going bullish, this thing is going to continue the momentum. But this is best traded in swings. You're probably not going to day trade it unless you had like a strong momentum push during the day. I'm not sure that'll happen though. Let's take a quick look at oil as well. As you guys can see here, we had this little downtrend channel that dropped from the highs of 123. We're still in this channel actually, and I just drew this line over here. I'm just going to color it a different color just so that it is apparent to y'all. This is like this top over here that we had in July, and this other top we had towards the end of July. Actually, this was in the beginning of July. This is towards the end of July. And then I expect, um, oh, well, as it sits right now, we probably come back and test this area over here again with oil. I'm not sure we're going to see much higher, but if we break outside of this line over here, you will see $98, and from there, we probably will see $100, 101 per barrel again. That would not be a surprise. However, if things turned around and we had some kind of news that will tell us that, production will increase, or OPEC made some kind of a decision, or the Saudis did, change their mind about something and they want to increase production or so, we probably will see a drop. But again, this is going to be a strong support over here at around the 85, $86 per barrel. And so, as of right now, if I am to trade oil, looks like here we have this little bullish flag looking pattern right over here. This is your flagpole. This is the flag. I would wait probably for the break above $94 or so, and I could probably take it about 77 cents to the top side. It could go all the way upwards of 95.72, and I probably wouldn't try to risk it further than that going long unless it breaks above this level over here. You still have some kind of resistances here on 96.61, and probably this orange line, which probably happens to be around the same area once it goes up here. So, there's a chance that we could drop, but if we don't, we can break and then we continue to the upside. So, eh, small move to the upside, it's not going to be looking bad. So, I would definitely, consider that if you're trading oil futures. And so, um, And if you're trading ETFs, I guess for oil, you can look at UCO. Depending again on what happens here with oil on this area, we will determine what would happen here. Probably see, okay, if that happened, if we broke that level, we can continue move up. We'll probably see upwards of $41 on UCO. All right, now on to looking at the stocks. We're going to start looking at Tesla, even though it's not sitting well with me lately. I haven't really been trading it. Kind of expected after the split for it to drop, which we had the split happen here on the 25th, and from that time, from the highs of the 24th till the end of day on Friday, we dropped about 6.2% or so, or 6.3%. Now, the key level that's going to be for me here on Tesla is going to be around $279. Now, mind you, we do have this head and shoulder looking pattern. However, I have to say how I feel about these head and shoulders. Head and shoulders are not bad patterns to trade. However, these patterns indicate a reversal. And so if you have an uptrend and you have some kind of a head and shoulder pattern like we saw on ES over here, you have an uptrend and then you have a head and shoulders pattern. At the break below that or the break and retest, you can enter short. It would actually be a lot, you know, a lot better. I would say it would have higher chances of actually moving the way that you want it to. However, here in Tesla, we didn't really have that. As you guys can see, it's not very clean. Doesn't mean that it's not going to happen. I mean, some people could argue that this here is a head and shoulder, that this is the left shoulder, there's the head, there's the right shoulder. But, to me, in my books, it's not very clean. I would probably wait for the break below this 279 area. And if that happened on Tesla, we could probably see a drop towards 272, and from there it could drop all the way down to about 260 or the high 50s. But this area over here of consolidation is going to be hard to break and hard to play, so I wouldn't be too optimistic on it. If we want to look at the overall picture, when I'm looking at the daily chart over here, I see that I have this little trend line over here looking up here, so there is a chance we can go back up and try to test this area at around 340. Tesla's very volatile, and so it could burn you pretty quick. But to me, I would think that this area over here, just with the way that the market is headed, is where you would need to pour your focus. And if we break below this level, there's a good chance for us to go to the downside even more. We have a little gap down here that I will fill probably at around $248 or so, 250. So it wouldn't be, out of this world to try to fill it. Now, of course, this chart is adjusted based off of the split. So as you guys can see over here, the highs that we've had, the 414, you multiply that by 3, and you will get what the value was before 1240 or so before the split. So, the next stock I want to take a look at that took some attention last week was Nvidia. Um, sorry, that's the way looking at the daily over here, and Nvidia had this little run that was really nice, upwards of 194, or even didn't even hit that actually, about 192, pulled back, came back up. This is the daily, obviously, that I'm looking at over here, and this is the sell-off that we've had on Friday. And again, this kind of messed with a lot of the uh, technical analysis for a lot of people, just because, we had some really strong moves over here from the highs of the day to the close. That was about 10% pullback. And so a lot of people are going to be like, okay, well, we dropped this much. Let's go ahead and take some calls because this is going to have a little bit of a relief bounce or like a relief rally. these aren't guaranteed. They're nice when they happen, but they're not guaranteed. And so I would definitely be careful over here. I would definitely watch for the 160. Just, try to play it level by level. Don't try to play it based off of emotions and whatnot. We can come back down here to the 160 and bounce. But my advice will be before taking a long, what's going to happen is first if we're going to go back to the upside, what's going to happen is that the price is going to come back, bounce, create some kind of a resistance and reject it, right? So wait for that. You would have at that point a support and a resistance. And at that level, you can say, okay, if we break above that resistance, then we're a little bit bullish, and this is my target to the next resistance up. If we come back down and break this support, then we're bearish, and my target is going to be the next support down. And that's what you need to do after such a big move like this one. Personally, I think Monday is not going to be a very ideal day to take trades. I would absolutely urge you to be very cautious. I would absolutely urge you to be, uh, I definitely would want you to be very cautious. I definitely would want you to be, uh, take your time. Don't just take a trade because you have to trade. You don't have to. It's not like a productivity thing where you get rewarded for the number of trades that you take. It's, you get rewarded in this market whenever you take whenever you take the right trades. That's when you get rewarded. You don't get rewarded for just taking a trade. And so on a lot of the stocks, whether it's being Tesla, Amazon, Google, all of these names, pretty much everybody just tanked. And so on Friday. And so what I would like to see first is for the market to try to form some kind of a support and or some kind of a resistance and base my trading off of that. Would that mean that I might be sitting flat on Monday? Could very well be, or I might switch to look at some penny stocks, as a matter of fact. But these are the levels that I would think Nvidia that we need to be watching for, I would think. Just like I drew over here with my little lines, if they're very clear, I would say watch for this 160 area. If we reject it and come back up, I would watch for this area to form a resistance. It could be further, but it could be upwards of 164 or 165. But I would wait for these supports and resistances to form. And based off of that, I would try to say, okay, if we create a range, for a minute or two, we're just going to wait until that range is created and we'll go take our position from there. Same thing happens on Google. Pretty much the same exact scenario happened. Is there a chance that Google could continue to see down 104? Possible, but after such a big run like this one, again, I would say let's just wait to see if it retraces and creates some kind of a support. If it comes back and break it, it can be going down towards 108 as the next support down, and from there probably even 106 or 105, and from there this region about the 105. I wouldn't try to short it further than that. But, just because you'll see a little rip in the morning on Monday doesn't mean you just jump right on and try to play it. Amazon is looking the same exact way, same exact setup, pretty much with everything. Um, you know, we're not looking obviously too bullish tonight with futures, and so I wouldn't be surprised to open with a gap down on some of these. They might come back and fill the gap in the morning and just continue to the downside as a continuation for Friday, but you can't go in with one bias versus another. Wait for the levels. And as of right now, the level that I have is this 132 as a resistance. If it comes back, if it rejects it, we can come back down to 130. This way, it would have created a support, and from there, probably coming all the way down to 125 or even further. But that would be crazy. It would have to be a crazy day for that something like that to happen. Um, you know, just about every chart that you're going to look at, except for the Chinese charts, I want to say for Chinese stocks, they looked like they held up pretty good, like Baba and Neo. These guys, ripped pretty hard pre-market on Friday. And, of course, with the tank that we had in the market, they came back down, but still not in the same kind of way that these other stocks did. I would definitely wait for Baba to see if we reject this level over here, continue to reject it, and move to the upside. Uh, we could probably come back here and visit these levels 100 and 104, even upwards of 106. To the downside, we have all the way down to 94 and even 92. Same thing with Neo. Neo did pretty much the same thing as these other the Chinese stocks. We ripped pre-market, drop down with the market. I would say as of right now, it's this level over here, 2182 has been a very hard level to break. If this thing breaks, we can see a gap fill upwards of 2262. So definitely keep an eye on this level over here, create an alert on it. And to the downside, if we continue to the downside, we had this wedge that broke, but obviously it wasn't strong enough momentum for us to go to continue to the upside. But to the downside, I would just wait for the break below this level over here at around $18 or so, 17.90. Then we could probably go down, see around $16. And so I would definitely, that's not what I meant to do. I'm going to go ahead and mark this level, let's say even 1774. If we end up coming in, breaking below it, um, you know, you can see this puppy continue to the way down. Now you can actually create a little bit of uptrend channel over here, looking on the hourly and say, okay, well, if we break below this level over here on 1850, I can play it to here, but it doesn't have a whole lot of meat on the bone. If we break below this uptrend channel. But again, if we come back up and break above this 2192, then you can fill this gap even upwards of 2329, and from there we can even touch the 2477. But it's been in this range for some time right now. So, I mean, if you played the range, you probably would have done well on it. You can still try to play the range on this one here, as long as you see a rejection around the 1850 area and a move to the upside, you could probably take it upwards of 2180, which is pretty decent range, as a matter of fact, if you look at it. So these were pretty much all the charts that I wanted to take a look at tonight, including the requests that I had from members. Uh, if you like the content, please consider liking and subscribing to this channel. And you can also join us in the Discord. It's the link for it is in the channel's description, and we would love to have you there. We trade live there pretty much every day, and we have also tools like TradyTex that we use to aid in confirmation for our analysis. You will have access to all of that, and we'll get you a pretty nice coupon to join for the first month. So again, thank you so much. I really appreciate your time, and this video will remain on the channel for anyone that would like to um, watch it later. And if you guys have any questions, feel free to send me any messages or